There you have it, the sound of the closing bell at the New York Stock Exchange.
Ending another trading week on Wall Street. The Dow recovered some ground after falling early in the day. The index ended the day down about 140 points.
That's right. The S&P and NASDAQ also finished the week with losses. Both were off just under 1%.
Joining us now for more on this is Victoria Fernandez. She's the chief market strategist at Crossmark Global Investments. Victoria, welcome. Great to have you. So what drove the markets a little bit down today?
Well, I think it all started last night. There was an interview with the CEO of FedEx. He talked about how there was going to be this global recession. They withdrew some of their guidance, just gave a very negative outlook for the year ahead. And even though the market was expecting slower growth, even though there were expectations of a recession maybe next year or later this year, depending on who you ask, having a CEO of Federal Express, of a shipping company that usually tends to be a signal for what the rest of the market is going to do, having those negative comments really put the market on a downward trajectory today.
Victoria, we know first-time unemployment fell again for a fifth straight week. How is the strength of the labor market impacting the Fed's battle to tame inflation?
It's really tough for them. It's kind of the thorn in their side in a sense, because they want to tame inflation, but they know that with such a strong labor market, with what we call the JOLTS number, how many job openings we have, twice as many job openings as people in the labor market looking for a job, that it's going to be really hard to bring that component down. And that's where wage pressures come in, which is a big part of inflation. So what they want to try to do is bring more people into the labor market, which will help keep a lid on some of the wage hikes that a lot of corporations are feeling the pressure to do at this point in time. But it makes it difficult for the Federal Reserve to keep raising rates and battle inflation with the labor market so strong.
Well, speaking about this tug of war between inflation and the jobs market, what do you think needs to happen for the economy to get back to a place of normalcy?
Yeah, I guess it depends what we want to say normalcy is at this point. And I'm not sure I have a good answer for that. But look, when we take a longer term perspective, and we know that the Federal Reserve wants to get inflation back to around that 2% level, that's their goal. We don't anticipate that that's going to happen this year. We think maybe we'll get back down to around 4%, maybe 5%. Right now, we're at over 8% inflation. So we think we'll see it come down a little bit. We need the consumer to stay strong. We need to continue to see that demand for corporations to continue to have solid balance sheets and support their employees. That's going to help the what we call a soft landing, help growth come down a little bit, help inflation come down a little bit, but not go into a recession. We have earnings coming up in a few weeks, and that will really shift the momentum in the market one way or another.
All right. Thank you so much, Victoria Fernandez, breaking it all down for us. Thank you.
My pleasure.